Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
I'm Alex Steele.
And I'm Bailey Lipschultz, filling in for Paul Sweeney.
On today's Bloomberg Intelligence show, we dig inside the big business stories impacting Wall Street and the global markets.
Each and every week, we provide in-depth research and data on some of the 2,000 companies and 130 industries our analysts cover worldwide.
It is Climate Week, and today we look at how oil and gas are playing into the energy transition.
Plus, we'll discuss how the resulting emissions from wildfires are threatening to make global warming worse.
But first, we dive into that antitrust space. This week, the U.S. Justice Department sued the world's second largest card payment organization, Visa, over an antitrust matter.
The case was filed in federal court in Manhattan on Tuesday. We're told U.S. antitrust enforcers have been preparing a case accusing Visa of taking steps to keep rivals from challenging its dominance in the debit card market.
And for more, guest host Jess Menton and I were joined by Justin Teresi, Bloomberg Intelligence antitrust litigation and policy analyst. We first asked Justin whether this week's news surprised him at all.
The filing itself wasn't too surprising. We know that DOJ opened an investigation in 2021 related to Visa and its debit card practices. So we thought something might be coming. The timing before the election makes sense we'd see it now rather than later on this year. The complaint itself, it seems fairly strong. As the Attorney General said in his press conference, basically they're alleging that after Dodd-Frank and rules came into place about being able to route debit transactions over more than one network, Visa entered a series of contracts with merchants and banks that allowed it to favor its own network over those of its competitors. Seems like some true antitrust activity here that DOJ is alleging.
When you're thinking about, and especially when you're talking about the current administration and the election coming up, do you think a new administration would be able to potentially amend a settlement here?
There's a couple of things to consider here. The first being that this is not Visa's first time at the antitrust rodeo, if you will. The company was sued back in 2001 when it was still linked together with MasterCard before it went public. And that case ended in a settlement. In 2010, there was a similar antitrust suit related to credit card fees. That case also ended in a settlement. So there is some history here of these cases tending to settle, and whether or not a new administration might be amenable to that, it really remains to be seen. But I think settlement is certainly something that's on the table. And important to remember in all of this, too, is that the DOJ is really after some behavioral changes with regard to these agreements, right? We're not talking about some kind of a structural change in Visa as a result of this litigation, most likely.
Right. So then what does that look like? So they can't pay Apple anymore, et cetera. So Apple loses money. And then what does Visa do?
Yeah, it's a really a great question. And I think one that really goes to the heart of Visa's debit business here. DOJ is alleging that as a result of 180 of the largest of these contracts that Visa has, they've been able to shield themselves from competition on 75% of the debit volume that's going through its network. So this is a big money maker for Visa. It's something to really keep our eye on here because it could result in a chunk of its business going away if these contracts were to also go away. So that's really, I think, what we have to scratch our heads about and wonder, is that the ultimate remedy that we see from DOJ? But lots of time, too. I'll give you an example. The Google search case from filing to trial, that was a 3-year time span before we got there. So this is going to be something that's around for quite a while.
Is there any way that Visa could argue that the complaint fails to account for increasing competition from alternative payment methods if you're thinking about account-to-account transfers?
Yeah, and I think that's exactly where we could see Visa go in its motion to dismiss arguments or later on down the line. You're right. We're seeing this increase in competition from things like Venmo or Cash App, right? But the complaint is basically alleging that those forums haven't been able to scale up to be as large as they really could be because of deals they have with Visa. But the reality is, as you and I both know, folks are using those platforms and the marketplace is changing. So I think that's probably going to be part of parcel to what we see Visa saying in its defense here.
How long does something like this take, particularly as Jess was pointing out, we might have a change in administration?
Yeah. Again, really slow moving cases here. I think this is going to be something that's around, I would say, for the next 2 or 3 years. At a minimum, we're going to go through a ton of motion to dismiss practice next year, likely get over that and find ourselves in a discovery phase. So
is this like an overhang on the stock then
Yes.
until then?
I would say so. I mean, how the stock reacts is how the stock reacts, but the overhang is something that is a long-term risk. I would say that's absolutely accurate.
In what ways do you think it would impact Visa's earnings and revenue outlook?
Again, I think we really have to go to the heart of the question here with, the actual percentage of debit transactions that Visa's been able to shield itself from competition on. Again, the complaint, if it's correct, and again, the government's best day is always the day they file their complaint because no one's really, responded to it yet. But if the government's correct that Visa shielded itself from competition on 75% of its transactions from these largest contracts, that's a significant part of Visa's actual debit revenue. So that, I think, is where the concern is coming in. It really goes to the heart of Visa's debit business.
Yeah.
And we'll have to see what plays out over the next couple of years here with regard to possible remedies or a settlement.
Our thanks to Justin Teresi, Bloomberg Intelligence Antitrust Litigation and Policy Analyst.
One story from the Bloomberg terminal this week that caught our eye was about colleges.
Skyrocketing tuition costs, COVID, and fewer high school graduates have been straining the survival of smaller American colleges, leading many to shut down. Now, some are joining a surprising path: mergers and acquisitions.
Northeastern University, once known as a Boston commuter school, has even formed a dedicated mergers and acquisitions team with the mission of getting big in a hurry.
It's the subject of a Bloomberg Big Take story titled "A College Taps Wall Street Playbook to Rival Ivies on Admissions."
Guest host Jess Menton and I were joined by one of the authors, Francesca Maglione, Bloomberg personal finance and higher education reporter. And we first asked Francesca to walk us through the legs of the story.
Northeastern University has been known for years as a commuter school, mostly attended by local students. And since 2011, they've kind of been expanding their brand. They now have 14 campuses across the world with 3 campuses abroad. What we thought was interesting is that since 2019, they've been buying up other struggling schools, kind of tapping in that private equity playbook, and
like an M&A.
Yeah, like they've merged with 3 different schools so far and kind of embedded the Northeastern brand on these schools, and now can offer to students like, hey, you can study for a semester in California, you can do a semester in New York. And this is very different from those schools like Princeton and Harvard, which just want to stay small and elite. They want to expand their brand as much as they can.
Because there's a lot of schools, especially in the South where I'm from, where you had a lot of magnet schools and then satellite schools, whether it was like the University of Texas or Texas A&M. So you'd have not just the main campuses, say in Austin, Texas. You had ones in say Dallas and outside of that. So I'm wondering, is there a particular playbook when it comes to kind of like the M&A type of feel it comes to something like this, or is there different, not apples and apples, I guess?
Yeah, I guess what's interesting with Northeastern is that higher ed is going through a very hard time. There's a lot of smaller schools that are closing all over the U.S. And so Northeastern is growing at a time when all of these other colleges are shrinking. Colleges are competing for students. The number of students across the U.S. is going to drop by 10%, the number of students going to college.
Really?
And so
why? What's the driver there?
It's just a demographic cliff.
And the cost, the insane amount of cost, I'm sure has
extremely expensive as well. Yeah. COVID was really bad for the college enrollment numbers as well. And so Northeastern is kind of growing at a time when all these other schools are shrinking. And when looking for schools, they want valuable real estate. The latest acquisition that they have is in New York. Now they have 3 buildings in Manhattan.
Did they buy Marymount, or was this part of the Northeastern
thing? Yes, they don't call it buying because
Marymount still has its own brand.
They just swallow their liabilities and their assets. There's no exchange of money that changes hands.
Oh, interesting.
Yeah.
Is it working? Is this playbook actually helping Northeastern?
Yeah, it's working. Northeastern last year had almost 100,000 students apply to their university. They've seen their enrollment increase by 15% since 2019. And they've gone from being just a local, little-known brand to being known worldwide.
But part of the college thing is like the experience, right? Like you go there and you live there. Like maybe you take a semester abroad or something, but like you stay there. And it feels a little weird and disjointed to then all of a sudden be like, you're here and then you're there and then you're here and then you're there.
Yeah, for sure. That's one of the things that Northeastern will say is changing within higher ed, and that's why they've been successful in this moment. They think that students no longer, or some students no longer want to, spend 4 years in one place with a small community, and they're looking to get new experiences and be more practical in terms of their 4 years. How can this translate into career after college and things like that? So that's another way that they're different from other colleges.
Are there other potential universities or colleges that are eyeing this type of model and they may try to do and replicate something similar?
Yeah, for sure. Northeastern's told us that they've heard from almost 50 schools that have reached out kind of interested in either merging with them or learning about their business model. We saw that Vanderbilt has now a campus in Florida. That's kind of a school that's trying to do something a little similar, not at the scale that Northeastern is doing it, but there's a lot of schools watching what they're doing right now, yeah.
So is what they're doing also, though, different from that Marymount thing? Like, I can still go to Marymount here, say, in New York City versus Northeastern, and then I go spend a semester in California.
Yes, so Marymount is part of their whole plan.
Okay, so that is part of it.
Right now, they're still Marymount because the merger was just announced, but eventually it'll be Marymount at Northeastern or whatever brand they decide to go with, yeah.
So then I can go to Northeastern and then be like, I'm going to spend a year in New York going to Marymount.
Yes.
Nice.
Okay.
Yeah.
Yeah, that's just so interesting. It's just such a different college experience when
I would have been used to.
I would think that you go to college, you learn how to be by yourself, do laundry by yourself, get into debt by yourself, drink beer by yourself, and then that's it. Not jet setting off to different locations,
Yeah.
Our thanks to Francesca Maglione, Bloomberg Personal Finance and Higher Education Reporter.
Coming up, a conversation with Ravi Menon, Singapore's Climate Action Ambassador on sustainable financing in Southeast Asia.
You're listening to Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries. You can access Bloomberg Intelligence via BI Go on the terminal. I'm Bailey Lipschultz.
And I'm Alex Steele, and this is Bloomberg.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I'm Alex Steele.
And I'm Bailey Lipschultz, filling in for Paul Sweeney.
Each week, we look at research from Bloomberg BNEF, previously known as New Energy Finance. They're the team at Bloomberg that tracks and analyzes the energy transition from commodities to power, transport, industries, buildings, and agricultural sectors.
This week, we looked at how oil and gas play into the energy transition.
Guest host Norma Linda and I were joined by David Doherty, head of Oil and Renewables Fuels Research, and we first asked him to discuss some of the trends that he's noticed over the past year.
Yeah, I mean, if you think of the players in the oil market, they're the energy pros in the world, right? They've got the balance sheet, they've got the skills, they've got the technology, and they're already established, right? So they've got interest in seeing how this develops, how fast it goes, how it impacts their bottom line, basically.
What are the main holdups in terms of the transition? What are some of the headwinds?
I mean, capital is obviously one, raising capital, smarts, people in the right jobs in the right place, pushback both political and from people, right? People love the idea, but as soon as it costs money, that's kind of difficult to swallow, especially now in inflationary times, right?
Is the conversation that EVs will eventually supplant internal combustion engines and get rid of gas demand, is that still something that you guys are working with and modeling, or has that conversation evolved?
It's evolved. I mean, that is kind of the trend, though. Yeah, when you look at things when they're cheaper up front, right? Consumers tend to shift towards that. If it's cheaper day one for buying an EV versus an internal combustion engine car, and all else is equal, you're probably going to see a shift towards that, right?
So we're really, though, U.S. centric here, and we don't see that in the same way. But elsewhere, is that truly what's happening?
Yeah, you are. You're seeing a big uptick in Europe and in China, for example, and even here in the U.S. California, for example, behaves much more like a European economy when we think about the transition to EVs. We've seen really high rates of penetration there.
What are some of the main themes and market dynamics that your team is focused on right now?
Yeah, the rate of this change is interesting, what's happening in different markets, what the response is. If you take the US, for example, it's a mature market. So when these EVs come into the market, you're seeing a decline in gasoline sales versus, say, in China, where it's what could have been doesn't necessarily manifest, right? So that turns into then power in your pocket, right? You're seeing the cost of gasoline isn't coming down, even though you're expecting it to with less gasoline being consumed. There's so many more dynamics than just a four wheels on the road situation, right?
And how are all these things impacting the consumer?
Yeah, I mean, if you think about costs in your pocket when it comes to driving your car, that's a big thing, particularly here in the US, particularly in an election year. You know, it trickles down into inflation. You get something delivered to your house. The cost of diesel impacts all of these things. So yeah, consumers are super sensitive of anything to do with cost at the moment. And probably the biggest development here in the US that's been interesting is less consumption of gasoline hasn't turned into less prices at the, a lower price at the pump.
Why do you think that is?
Well, this is key. This is something we have to think about as we go towards transition. If you pull supply in any scenario, you're going to see a price spike. In the US, we're seeing less refinery production than we have a few years ago. So you're seeing over 1 million barrels per day cut in the last 2-3 years alone. And when you have less supply of something, even if you have less demand, it really depends on which one goes first and how speedy that changes.
And so what are people thinking? When will this all shake out?
I mean, it's shaking out already. It's already shaking out in the forecourt when people are buying their car. You're seeing the response from refiners, for example. Some big refineries like P66 are switching some of their facilities to make things like renewable diesel or sustainable aviation fuel. So people are posturing. Companies are posturing for the next 5, 6, 7 years, right?
Mm-hmm. Which is such a great point, because I guess the question then becomes, if we're posturing for the 7 or 8 years, what does the landscape in your world look like then? I mean, everyone seems to say it's a yes and. We need everything above all and. Is that how you model it?
That is how we model it, yeah. Mm-hmm. In our sort of standard outlook, 2029 we see peak oil consumption globally, so that's still pretty far out. There's still a lot of growth left.
Also, peak doesn't mean then that it goes to zero.
Correct.
I feel like that's something we need to also wrap our mind around. Like, just because it's not increasing doesn't mean it's rapidly decreasing.
Yeah, you're totally right. Even in a net zero world in our modeling, you get about 25 million barrels per day of oil. So, net zero doesn't mean zero oil.
So what is the growth outlook here?
You're looking at about 4 or 5 million barrels per day upside in our base case scenario, but lots of things can change that, right? Policies are the main thing to look at, particularly in big markets like the US, right? The US consumes about 1 in every 5 barrels globally. So if something changes here, the whole market can change. The dynamic is really upended.
When we take a look at, say, China and India, large consumers of energy, obviously, are they jumping from coal to what?
Gas is a transition fuel. We're seeing them shift towards. I was just in Beijing last week, and there's a very different way of looking at the oil market versus if you're down in Texas, right? It's what's the displacement, because they need more and more energy, right? They don't want to import that energy, so what can you do domestically? In the case of power, that's coal. But we're also seeing in the case of EVs, right? LNG trucks, even electric trucks. So we have a lot we can learn from them, but they're just very different markets.
And how do they get there? Is it because of subsidies? Is it because they were so dependent on coal? Like, what leads that transition there differently than, say, in the US?
Yeah, I mean, I think it's dependency on imports. They're one example. They've got a lot of national champions. And to be honest, when they say they're going to do something, they do it. In Europe and in the US, you got to get it through parliament, you got to get it through votes. It's a lot slower of a process. And there's less domestic manufacturers. Like Tesla's a big player here, but that's kind of it. In China, you've got a lot of big producers, a lot of big industrial champions, right? And they're encouraged by the states and by the cities and by incentives.
So how do we fit into the bigger international ecosystem?
Well, for the US, one of the most important things is its sort of gasoline production machines. You send a lot of gasoline abroad, South America, Europe even. So there's a change coming along for US refiners, basically, and you're starting to see how they adjust their positioning in a sort of a market-leading way, I think.
Our thanks to David Doherty, head of Oil and Renewable Fuels Research.
This week, Bloomberg Intelligence broadcasted live from the Earthshot Summit at the Plaza Hotel in New York City.
The summit celebrated innovators who are trailblazing solutions to repair our planet, and the event was co-hosted by Bloomberg Philanthropies.
Guest host Damian Sassower and I were joined by Ravi Menon, Singapore's ambassador for climate change.
He discussed the global impact of central bank policies and also sustainable finance in Southeast Asia.
I first asked Ravi to reflect on his former role as managing director of the Monetary Authority of Singapore.
Well, I've been a bit removed from that scene for quite a while now, but if I were to reflect back 2 years ago when we were all facing a surge in inflation globally, and the conventional view at that time, which I subscribed to also, was that given how low interest rates were and how easy and accommodative monetary policies have been for 10 years, the catch-up to tighten rates to bring down this inflation is going to be unprecedented. And indeed, the hikes in rates and the tightening of monetary policy, including in Singapore through the exchange rate, was quite significant. And I thought this was going to come at the cost of a severe slowdown in economic growth and rise in unemployment. I'm talking globally, right? And this has been the case in all previous instances. I think looking back, we've done not too badly.
Yeah.
We've avoided major recession in the major economies. There hasn't been any sizable increase in unemployment. The labor market has been quite resilient. And surely, we've been bringing down inflation. I think this is a credit to many of my ex-colleagues in the central banking world. I will not comment on specific policy moves, such as the one they made recently. But I think we should step back and see we actually did not too badly. It could have been much worse. To be able to ease this early, whether that itself is the right move, I would not comment. But the fact that we're even having this conversation about easing, about stimulus, when not too long ago we were fighting inflation, it has come down. So I think this has been quite remarkable.
And this also brings sort of the question of climate action and financing that part of the market as well, because part of the conversation here in the US with the Inflation Reduction Act is that in essence is inflationary, and that the more money that every country spends on greening stuff, the more you're going to create sort of an inflation bubble. Is that true from where you sit?
I think that is going to be at best quite short term. Some stimulus through any new investments going into an area of scarcity will create some price pressures and demand pressures against limited supply. But the objective of the Inflation Reduction Act, as is the objective of similar packages in every other country, is to expand the supply capacity, for renewables, for cleaner technologies, and so on. So yes, in the short term, that capacity has not increased. You will get momentary increase in inflation and price pressures as you put in demand. But when the supply capacity increases, that should stabilize.
Yeah.
So as with any industrial transformation or restructuring, there will be short-term price effects, but that should even out once the supply and demand are back in. So I don't think there's anything inherently inflationary in these packages.
In Singapore's key position along the Malacca Strait, it sits between two of the largest polluting countries on the planet, that being China and India. Talk to us about your location in the world, your geostrategic location. How are you addressing those two nations, their ability to enact climate change?
I think both China and India have huge potential to address the climate challenge, particularly with respect to mitigation and renewable energy. The countries are large. We often forget that China is installing more renewable capacity each year than the rest of the world put together.
Yeah.
India is a close second. So these two countries, in terms of their geography, are well endowed to deploy clean energy. But they're going to take time, because what we forget is that energy demand in these countries is also increasing rapidly. Yeah. The energy consumption per capita in China and India is a fraction of that in the West.
Right.
And there are still many villages without access to electricity. Mm-hmm. So even as they install solar capacity, they are having to build coal plants and keep their fossil fuel plants running to meet that, which is why they're going to take longer. But surely they will get there because of the inherent capacity for renewable energy. Actually, where I worry more is Southeast Asia, because similar situation, rapid growth in energy demand, rise of middle class, urbanization, people having access to electricity.
So you mean Indonesia, Philippines, Vietnam?
Yes, all the countries around us, including us. We are in many ways alternative energy disadvantaged. Singapore particularly so, because we're a small island, city-state. Imagine New York, deploying clean energy entirely within the city. But even in the countries that are relatively well endowed, they do have challenges with grid, for instance. It's forested, mountainous. Laying those transmission lines is not easy, not straightforward. And the distribution of renewable energy capacity is very uneven geographically across Southeast Asia. So I think that's where a bigger challenge might be.
What about financing? We have like 30 seconds left. What's the biggest hurdle to financing all of this right now?
There is enough private capital in the world to solve the climate crisis. There is enough financing. If you look at the annual flows of financial assets, well in excess of the funding gap. The problem is you need to find bankable projects at appropriate risk-return metrics. And this is where you need blended finance with public capital coming in to catalyze private capital. That synergistic combination is what we need, and that will be enough to solve this.
Our thanks to Ravi Menon, Singapore's ambassador for climate change.
Coming up on the program, a look at policies in the European Green Deal that look to make the European Union climate neutral by 2050.
You're listening to Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries. You can access Bloomberg Intelligence via BI Go on the terminal. I'm Bailey Lipschultz.
And I'm Alex Steele, and this is Bloomberg.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm Alex Steele.
And I'm Bailey Lipschultz, filling in for Paul Sweeney.
We continue with conversations from our broadcast at the Earthshot Summit at the Plaza Hotel in New York City.
The summit celebrated innovators who are trailblazing solutions to repair our planet, and the event was co-hosted by Bloomberg Philanthropies.
At the event, we looked at the European Green Deal. In the deal, there's a set of policies that look to make the European Union climate neutral by 2050.
To achieve this, the European Commission has pledged to mobilize at least 1 trillion euros in sustainable finance investing.
Guest host Damian Sassower and I were joined by Nadia Calvino, president of the European Investment Bank, and she talked about the bank's role in the European Green Deal. We first asked Nadia whether the bank is meeting its targets.
Yes, well, it's going well. It's going well. We are on track to meet the target of 1 trillion euros in investment in green finance. More than 50% of our annual investments go to the climate transition, to the green finance, so as to make it a success, a European success, a global success for all of us.
But why do I keep hearing then that Europe has more of the stick approach and the U.S. has the carrot approach with the IRA? How do they differ?
Well, I think that we have a shared endeavor, which is to ensure that we do this green transition, that we move to a net zero economy, and that this is profitable. Well, my side of things is the carrot, actually. I am the investor. So we are the largest multilateral development bank in the world. Maybe people don't know, with a 600 billion balance sheet. 90% of the investments are done in the EU, where we are the largest investor in renewables. We're probably one of the largest investors in renewables in the whole world.
Well, Nadia, I mean, renewables is a very broad topic. Solar, wind, water, nuclear. Talk to us about where you're deploying your balance sheet. I mean, 600 billion is a lot of money.
Well, more than 50%, as I said, is going to climate finance. And this is sustainable infrastructures, this is sustainable transport, this is also renewables, wind, energy grids, solar, and also new fuels, the fuels of the future, for example, green hydrogen. We're supporting very innovative, large projects, also large traditional infrastructures, and dynamic startups that are really going to be the ones finding the technologies, the breakthrough technologies for all of us.
I mean, we've seen with hydrogen, though, that it's hard. That green hydrogen in particular is quite hard. I mean, Germany had to sort of backtrack from that, in particular with the war in Ukraine. In addition, like Ørsted dropped and had to ditch out on a hydrogen project. Can you do hydrogen profitably? And how do you do that?
Well, we have to, because it is.
But can you right now?
Well, right now we're investing in a number of projects in Europe, which are more having to do with industry hubs. So we are greening industry, highly polluting, highly energy intensive.
So like
industry.
A cement industry that
yes, and steel, all these large industry. So we are seeing, for example, close to a port in the south of Portugal. We're going to have a green hydrogen hub. So that's very close to traditional industries, and we're helping them become green and also profitable. Likewise, in other parts of Europe, we are at the early stages of these new technologies, and it is only normal, that some projects fail, that some projects are succeeding, and that's why we are, the European Investment Bank is a public investment bank to take the risk, to make sure that patient capital, long-term investors are taking those risks so that also we mobilize private capital and we make this a success.
Well, other multilateral finance institutions, development banks out of, for example, China, Korea, et cetera, have had a very poor track record of deploying capital profitably. And, I know the EIB is different. I know the World Bank Group is very, very different. And I know we're talking about perpetual capital and perpetual investments. But at the end of the day, you do have to get a return on your investment. So talk to us about which sectors within the broader, renewable space, within the broader climate space, carry the highest return on investment from your perspective.
Well, actually, we are very profitable. Let me be very clear. The fact that we are a public bank doesn't mean that I don't have to deliver for our shareholders.
Of course.
So around 2 billion euros we had in profit last year. We've been profitable since the bank was, since its inception. We have a very low return, very low level of non-performing assets. When I say very low, I mean like 0.4% of our assets. So it is a very profitable bank, and what we have is a very large balance sheet and very balanced portfolio with large infrastructures, traditional infrastructures, which are very profitable, lower risk, and also highly risky endeavors like innovative startups or large investments into new green technologies. And that's what's allowing us, I think, to make a difference in making projects bankable at the end of the day.
So what have you noticed in terms of if you support a project, does it bring in private investors and private capital at the end of the day?
It does, absolutely. You know, the European Investment Bank is considered to be a reference in terms of technical expertise in some areas, for example, green, for example, health. So once the EIB says, yes, I'm going to invest in this project, immediately a number of investors say, I join.
Nadia, I'd love to ask you a question. I mean, in my world, the emerging market space, there has been an absolute explosion of sustainable finance vehicles and mechanisms, you know, green bonds, clean bonds, you name it. I'm curious to hear your thoughts about a lot of that. I mean, a lot of sovereign nations, a lot of countries are issuing debt under this green bond umbrella. You know, do you believe in that? Do you think they're just greenwashing, or are they really deploying that capital in a clean and efficient way?
We have to ensure, indeed, that the green bond standards around the world are not greenwashing, and that should be a top priority. Otherwise, you know, once you lose the credibility, then you lose everything in capital markets. I don't have to explain it to you. So that's why I think we have a very important, a shared interest in having global standards. You know, the taxonomies that are being developed in different parts of the world, and Europe has been a pioneer in that area. Also, the European Investment Bank, by the way, has pioneered green bonds, and we have to make sure that those standards are met and that green investments are really green, so that we make sure that this is providing sufficient finance to close the investment gap.
How do you offset your risk?
Sorry?
How do you offset risk when you're taking on riskier projects?
Well, we have a capital base, but generally what we do is that we have riskier and less risky projects, and we mobilize our capital in a very wise manner, you know. Sometimes our shareholders say you should take on more risk because that's what your capital is for. But I think that we have a relatively good balance in terms of...
Can you give me a balance on that? Like, what would be considered a low-risk project? What would be considered a high risk, for example?
Well, an infrastructure in a European country, that is a low-risk project. You know, when we are building trains or rolling stock or a metro or port, I mean, this is we are lending to a sovereign state which has a very high rating, and this is our shareholders. So investments within the EU are considered to be generally lower risk. Or, for example, we do also, through the financial sector, we do lending to SMEs in Europe that is very profitable, lower risk than if we are investing in a very large project, 1 billion, 2 billion project in green hydrogen, as you were saying, you know.
Well, you know, I'd like to take a variation on that question that's important, because you're right, it's a lot of these small and medium enterprises, they're the ones who are actually proactively, you know, taking risk in the market. What sort of risk hedges, transmission vehicles, carbon credits, offsets can they take advantage of? I mean, what's available to them to help offset their risk in this space?
Good question.
Well, what we do is we provide guarantees and portfolio guarantees or other sorts of financial support to the banks so that they can lend to SMEs with lower interest rates. That's basically what we do. And again, that allows us to reach a large share of European SMEs. And they are, for example, now investing in green technologies, energy efficiency, thanks to the support of the European Investment Bank. I don't know if many of them know it, you know, because they go to a bank, a commercial bank, but you know, although they have to signal in their loans that this is supported by the European Investment Bank. I don't know if they always do, but the fact of the matter is the EIB is one of the key elements that is driving the European economy.
Our thanks to Nadia Calvino, president of the European Investment Bank.
Staying on climate, we also focused on a Bloomberg Big Take story this week titled, "Climate Change is So Bad, Even the Arctic is on Fire." Guest host Damian Sassower and I were joined by one of the reporters on the story, Kyle Kim, Bloomberg Data Visualization Reporter. We first asked Kyle to walk us through the story and what he learned.
Climate change, you know, is making wildfires more common and intense, and that may not be the new part because that's, you know, been in the news for a while, but it's also causing fires in places that a lot of people normally wouldn't expect, like the Arctic and the wetlands in Brazil and Indonesia. And what's really unique about these fires is that they tend to move underground and smolder below the surface, and it could be for months that this is happening. And these underground fires are basically burning through prehistoric vegetation called peat. and just releasing enormous amounts of carbon. And these peat materials, they only cover about 3 to 4% of the Earth's surface, but they hold up to a third of the world's soil carbon. So it means that these fires are having an outsized impact on climate change and causing a lot of negative feedback. We're seeing that carbon from the burning peat is causing emissions from the Arctic Circle to skyrocket, and it's accelerating the thawing of permafrost there, which is this always frozen layer in the ground. And when it melts, it releases things like carbon and methane, and it's making the Arctic even hotter.
How do you prevent that? Like, I appreciate that we all need to tackle climate change, etc., but this specifically, because it's even hard to see, how do you manage it?
Yeah, well, even the professionals, it's fighting fire in general is a hard task, right? But fighting them underground, it's very difficult because it is not visible. So they, look for smoke coming from the ground. And for example, in places in Indonesia, firefighters are using fire suppression holes. They're basically injecting water into the ground, and it's hard to tell really if it's fully extinguished or not. And it's this is a very understudied and not well understood yet. And so there's still a lot to learn in how to combat these kinds of fires. And for now, better monitoring for carbon emissions, but at least help to understand the scope of the problem.
Well, Kyle, here's the interesting thing about it. You make a great point. The permafrost cover, this is a real risk, black carbon. We know what the risk is, but isn't a lot of that taking place in Russia? Is Russia even aware of this, and do they even care?
Yes, they definitely are aware. Scientists project as much as a third of the permafrost in the northern hemisphere is going to recede by the end of the century, and a lot of that is in Russia. A lot of the permafrost now that's going to be gone by then, and the climate experts are already identifying the eastern region of Russia has seen the largest growth amongst Arctic wildfires since the early 2000s. So they're aware that it's going to be more and more of a problem.
Our thanks to Kyle Kim, Bloomberg Data Visualization Reporter.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.